and welcome to the Chamber's first EDC Webinar, What a Small Business Needs to Know About the CARES Act. We appreciate that so many of our fellow Chamber members are participating in this webinar. We are grateful for the opportunity to connect with you in this format about this enormously important legislation at this crucial time. We are very pleased to have a distinguished panel of industry experts join us this morning to discuss the recently passed Coronavirus Aid, Relief, and Economic Securities Act. The CARES Act is a bipartisan $2 trillion economic relief plan signed into law by President Trump just last Friday. It provides assistance to American households and small businesses affected by the coronavirus. There are numerous components contained in the 900-page law. However, our panel will focus today on the specific provisions that impact small businesses. Without further delay, I would like to briefly introduce our moderator and panelists. I'm sure that many of you are familiar with Bob Porter, the Chamber's Vice President of Public Policy. Bob has 35 years of congressional and private sector government relations experience and will moderate our panel and field your questions to the panelists following the presentation. On our panel, we are honored to have Mr. John Delaney, former mayor of Jacksonville and former president of the University of North Florida, join us. John is a principal with the Fiorentino Group, where he provides the firm with invaluable knowledge and expertise on issues relating to local, state, and federal government. He has particular expertise in the areas of education, the environment, business relocations, and economic development. He's also a shareholder with Rogers Towers in the Governmental and Regulatory Law Department, where he specializes in the areas of government relations, land use, higher education, and general civil litigation. Mayor Delaney, thank you for being here with us this morning to discuss the CARES Act and what it means for small businesses.
Appreciate it.
We're also grateful to have Mr. Cecil Gibson with us, a second-generation banker serving in the banking and financial services industry for 42 years. Cecil is currently the market president for Ameris Bank in St. Augustine. In his position, Cecil is responsible for all core banking business in the St. Augustine market, a $650 million banking operation, including St. John's, Putnam, Flagler, and Volusia counties. Cecil is a graduate of the University of North Florida and an honors graduate of the Florida School of Banking at the University of Florida. He has been active in various types of SBA financing programs for the last 20 years and has served as a business profile consultant for the Small Business Development Center at the University of North Florida. He was also nominated as a Small Business Financial Services Advocate of the Year. Cecil, we are thankful that you have joined us this morning to share your banking expertise and particularly your experience working with small businesses.
Good morning, Mike. Thank you.
You're welcome. I'm also pleased to introduce Michael Scine, owner of Scine CPA Advisors in St. Augustine. Michael specializes in corporate and individual income tax services, helping both businesses and individuals navigate the world of taxation and providing outsourced tax and business solutions. His areas of expertise include corporate tax planning and compliance, partnership tax planning, federal tax research, and accounting system implementation. Michael holds a Master's of Science degree in taxation from Fontbonne University in St. Louis, Missouri, and a Bachelor of Science degree in accounting from Flagler College. He is certified as a CPA from the Florida Institute of CPAs. Michael is also a committed member of the Northeast Florida Bridge Loan Program through the SBDC of Florida. Michael, thank you for joining us today and bringing your professional experience to this discussion.
Thank you for having me.
Absolutely. Finally, I would like to introduce Mr. Andrew Jackson, the founding and managing partner of Jackson Law Group. Andy has been practicing law since 2006. As a managing partner, he manages prospective clients and the firm's practice areas, which include tax law, estate planning, real estate, business law, and community association law. In addition to managing the firm, Andy's focus practice is on tax law, business and corporate law, and estate planning. Andrew received a Bachelor of Arts in Economics, magna cum laude, from Hampton Sydney College and a Juris Doctorate, cum laude, from Florida Coastal School of Law. After law school, he continued his legal education, receiving his Master of Laws in tax at the University of Florida. Andy, we are grateful to you as well for joining us and sharing your experience and knowledge with our members.
Good morning, Mike. Thank you.
You're welcome. Now I'd like to hand the program over to our moderator, Bob Porter, to start the discussion.
Thank you, Mike. Good morning, everybody. Format is pretty straightforward today. I'll be your moderator. Couple of ground rules. You should see on your screens, we're encouraging you to submit questions in writing, and I will share them with the panelists. If you'll just, we're not going to take any questions from the floor, in an audio sense. So just send us your questions, and we will try to get to as many of them as we can. And with that said, I'd like to have Mayor Delaney start off with an overview of the CARES Act.
Thanks, appreciate it. Probably to start with it, let's go back to 2008 and 2009 with the big recession. In 2008, there was a $900 billion bill authorized that helped bail out the banks and the auto industry. And then about $200 billion was passed to back support Fannie Mae and Freddie Mac, the big mortgage backers. As it turns out, by 2014, the government made a profit on that. And that's probably the last time you'll ever hear that, but that was all paid back plus. 2009 under President Obama was the Recovery and Reinvestment Act. That was about $800 billion, and that was safety net programs in state and local governments and infrastructure investments. So add that up, that's $1.9 trillion that was invested. If you adjust for inflation, that's probably $2.5 trillion. So then prior to the CARES Act, there were two previous bills passed just in the last month or so. Phase one was about $2.5 billion to fight the spread of the virus, fund the CDC, the Center for Disease Control, NIH, National Institute of Health, the SBA, Small Business Association, a few other federal agencies. In the scheme of things, $2.5 billion is sort of a pittance. Phase two came almost immediately after that, and that was $100 billion, which was free virus testing, a couple weeks of paid sick leave, increased Medicaid funding and food security programs like SNAP. Unemployment benefits were increased. And then we go to phase three, which is what our colleagues will go into the details here, which is the CARES Act. And that's $1 trillion. So if you add up those dollars, you're a little over $1.1 trillion that is in place now. That means, at least it appears, that there's going to be a phase four, if not a phase five. And I'll get to that in about 15 seconds. So the current CARES Act, and again, the other people on the phone will go into the details. It's got direct payments to taxpayers, capping out at about $100,000 and $200,000 for a married couple, a little under that actually, $1,200 a piece or $2,400 for a couple with those income thresholds. $300 billion in small business loans, an airline industry bailout of about $50 billion, $150 billion for hotels, casinos, and cruise lines, and then there's a series of kind of an alphabet soup or a smorgasbord of programs underneath it. Probably the ones that businesses, or at least I've found in the last week or two, that are the most interested in is the PPP, or the 3P, the Payroll Protection Plan. And I know we'll get some details on that. So skipping ahead, what would a phase four look like? Keeping in mind that right now, the federal government has spent less than half what it did to do the bailouts in the investment plans in 2008, 2009. So I really expect at least another trillion, if not $2 trillion, and that's commonly being batted around in DC. Phase four, the discussion, Speaker Pelosi is who's floated that some relief for healthcare industries, healthcare workers, and hospitals, an infrastructure plan which government tends to turn to try to get massive construction projects, ports, roads, bridges, schools, those kinds of things, because it puts a lot of people across a number of industries to work. Food aid, and then support for state and local governments. A quick pause for Florida. Florida has about 1.2 million people in the hospitality and tourism industry. 1.2 million, and the state's got about 22 million overall. Of course, and a chunk of those are kids under 18. And that industry is really in a state of suspended animation, as I'm sure there's some members on the call listening that are really impacted. And And the state budget's really going to be impacted as a result of that. There's plenty of reserves now to carry them through. The state also has its very, very low debt, the ability to borrow money, to put capital back into the state budget, et cetera. And then I think a phase 5 will be maybe a reinvestment in some of these individual programs. The speculation is pretty broad that the payroll protection plan does not have enough money for all of the potential applicants, but so I think there's going to be more money pumped into that, probably at least a doubling, if not more, and then more money into public health, into the National Institute of Health, and some of the area research institutions, hospitals and schools that are working on a vaccine or treatments. So I'll sort of close with this, really. We're probably looking at more. The problem is the federal government needs to get that cash out so quickly, and they're struggling a bit with that. And this last comment is not either a compliment or a criticism, but President Donald Trump is not afraid of debt. He's sort of had his whole life has been leverage. He isn't afraid of debt, and the Speaker of the House, Nancy Pelosi, and the Democrats are historically not necessarily afraid of spending. So I think we're going to see a massive investment back into the economy. Hopefully it's quick enough to really help individual businesses. And so with that, I'll turn it back over to you, Bob.
Thank you, John. That's quite a 30,000-foot view. Next up is Cecil Gibson, the market president of Ameris Bank. Welcome, Cecil.
Thanks, Bob. So I'm going to talk a little bit today about the actual PPP program, or the payment protection or payroll protection program. As Mayor Delaney said, this is a subset of the CARES Act. It has provided $349 billion to small businesses, primarily for the continuation of your payroll during this next 8 to 10 weeks. Practically every business in America will qualify, provided you have under 500 employees. There are provisions under certain industry codes, such as a hospital or hospitality industry, that will allow for larger employee sets, but those are specific to those industries and are addressed. They're addressed in the plan. Essentially, you can borrow up to $10 million under the plan. It is going to be largely based on payroll. In fact, it is mandated that 75% of the loan be spent for payroll and payroll-related services, and a maximum of 25% can be spent for ancillary items such as mortgage interest or utility payments or rent payments to be able to keep the business going once the employees get back. The provisions of the plan require that you spend the money to either maintain your existing payroll as it is, or to be able to reemploy folks that you've already had to furlough because of the coronavirus and how quickly everything shut down. You have until June the 30th to reemploy or to employ a staff that is within 90% of what your staffing was as of February 15th of 2020. If you are a new business that started after February 15th of 2020, there's slightly different rules there, but there's still provisions for you to be able to cover payroll with the PPP loan program. As a side note, there's been a lot of angst and a lot of, you've heard a lot of media attention on when's this program going to come, when are we going to be able to start looking at money. And the government has taken a roughly 900-page bill and turned it into a full-blown loan program in 7 days, which is remarkable for the federal government to be able to move that quickly. It's been a collaboration between the Treasury Department and the SBA. There has been some maneuvering on that, but last night, fortunately, the final guidance came out from the SBA that is signed off on by both the Treasury and the SBA, and they have made some minor changes to the program. Most of the borrowing parameters are intact. They have moved the interest rate initially from 4% down to 0.5%, And then last night in the final guidance, they've moved the loan interest rate back up to a 1% loan. Initially, the program was up to a 10-year program. Treasury and SBA has decided that that's too long for this temporary deal, and they're putting it together at a 2-year repayment. Most of the debt that is borrowed under this program can be forgiven if the business meets the parameters of forgiveness, and those are largely that you reemploy or that you bring back employees or you keep your employees to within 90% of what you had when this whole mess started, which is February 15th. That's the start date. You will be able to get reimbursement. Any of the funds that are not reimbursed will remain on the loan, and you will have up to 2 years to pay it off. During the first 6 months, you have a deferment of payments. There is no requirement for principal or interest payments during the first 6 months of the program. And banks, the SBA knew that this was going to be far bigger than their staff could take on. So the program is provisioned to be managed through the 7A program, which allows participating banks with the SBA to initiate the loans, to approve the loans on behalf of the SBA. And so you've got the power of all the federally insured financial institutions who want to participate in it out there to be able to provide access. Most banks have been already setting up their programs on how to get in. I know our organization has already got a list of close to 5,000 customers throughout our footprint that have put in applications or expressed the desire to put in applications. And the provisions in this program provide for it to be a first come, first serve program. Since the banks are administering it, they're going to take the loans as they get them. They're going to process them. The documentation is very, very simple. You will have an application. You will have to provide supporting documentation to show what your payroll was. And typically that's going to be submitting copies of your 941s, your 940s, the tax documentation that you file when you file for your federal withholding taxes for the last 12 months. You provide that with the application. The application has a few things that you need to check off, that you need to certify, and essentially the bank's credit checks are virtually removed. The banks rely on you, the business person, to accurately and truthfully put that application together, and you sign affidavits to that effect. As forgiveness comes out, you will probably they won't have all the guidance out on forgiveness, but more than likely, you'll be required to submit similar documentation to the initiation process to validate that you did employ the people that you did, that you said you would, and that you brought your employee base back to close to the level it was in February. Those are the highlights of the program. I think from a high level, the big thing for everybody on this call is if you haven't acted to get an application started or an application in process with your bank, you need to do it when you get off this call. I agree with John. I think the money is going to go out rather quickly. The program is designed to have all the money out by June the 30th. And I think it's a very good possibility that most of the allocation of this $349 billion is going to be done in the first 7 days of the program. Getting it out to the borrowers, getting it out to the business owners, that will be a little bit longer process, but again, it's very streamlined. I believe that shortly after your application and the bank setting it up and approving it, which is a short approval period, you'll be receiving funds. The final thing I'll add is this is 100% guaranteed by the SBA. The banks themselves take no credit risk, and therefore it makes it easy for us to put the loans out there when the SBA is going to guarantee repayment regardless of what happens to the business. So in a nutshell, that's the provisions of the account, of the program.
Next up, we will have Michael Scine, who will be followed by Andy Jackson to talk about different tax implications contained in the CARES Act. Michael?
Thank you, Bob. And just to piggyback off of what Cecil had mentioned, there's even if you don't get the PPP, you're still able to get some other credits, and I'm going to go into some of those. I'm going to stay at a high level as much as I can. There's a lot of details in this, but I'm going to try to narrow it down to the most pertinent information that we have. So the first item, as you can see in the slide here, in the center section, there's a tax provisions. I'm going to stick to the business for right now. The bigger one right now is the employee retention credit, along with the employer payroll tax deferral and NOLs. I'm going to try to cover those, and I'm going to talk a little bit about the individual recovery. I'm going to try to go as quickly as possible due to time, and also the fact that this is being recorded and you can play it back. So for the employee retention credit, basically there's two qualifications for employers that are eligible to get this retention credit. The first one is that you have to be fully or partially suspended as a result of the government having orders to limit commerce. That is happening right now, especially in the state of Florida. The second requirement is that you have to have a greater than 50% reduction in quarterly receipts measured year over year. So you compare your 2019 numbers versus your 2020 numbers. If you have less than 50%, you qualify. What this credit does, it's basically capped out at $10,000. It's actually 50% of the first $10,000 in wages that you pay to employees to retain them. And so what that means is that per quarter, you could get up to $5,000 credit per employee on a credit on your 941, your quarterly payroll taxes. So how does that look in terms, or when does that start? That starts March 12th. So technically, if you paid employees on March 13th through the end of the month, that could qualify for your 941 for the first quarter that's due this month. So I just caution people need to, everybody's trying to figure out how to react to this. So payroll companies are scrambling to try to figure out how does this get reported? There's no guidance yet on actually how that gets done, but it's there. So another thing with the PPP, if you have the payroll protection program, you cannot have this employee retention credit as well. You can't double dip on that. So we're going to have, and businesses are going to have to decide which one they want to have. Do they want the PPP or do they want the employer retention credit? There's a math that needs to be done to calculate those two. I would suggest calling your professional advisor and trying to figure that out, because there is a positive and negative of each one. The credit is 50% of wages up to $10,000 per quarter. So basically $5,000 per employee. Self-employed individuals do not count towards this. The credit is technically against employer portion of Social Security. And if you have more credit than is available on your actual return on the 941 form, then you can fill out a form 7200 to get an advance on that employee credit. So I say that because you can actually get this money in advance. It's a way to get cash in your pocket without, basically by not paying the government, you can put cash back in your pocket. So that's employee retention credit. The second one is a delay of your payment of employer portion of payroll taxes. So what this says is that if you, basically the Social Security portion of the employer taxes does not need to be paid for affected individuals, which is basically 6.2% until the end of the year. As long as you pay that before the end of the year, you take a credit on your 941. Those are deferred until the end of the year. So it's another way to keep cash in your pocket, not get cash, but really keep cash in your pocket as opposed to paying these payroll taxes. Unfortunately, we don't have time to dive into the details of that, but I would just circle back with your CPA in that regard. The next one I wanted to talk about is the NOL carryback. This one could be big for businesses. There's a provision that the carrybacks, meaning if you had a net operating loss in 2019 or 2020, But for people trying to figure out if they're filing their taxes so far, it may be worth it to just pause for a moment to see if you have an NOL that you can carry back. So if you're filing your 2019 tax return and you have a loss, that can be carried back for up to 5 years. So that's an immediate, pretty immediate cash availability, because you can take this NOL back to 5 years ago and get a credit for that on your current year taxes, 2019 taxes. There's a couple other provisions I'd like to go over, but the biggest one I wanted to talk about, or the second biggest one other than the employee retention credit, is your individual recovery rebate credit. That one is what you hear about in the news. I think there's a little bit of confusion about this credit, so I just wanted to clear that up. The credit is the $1,200 per individual and $500 per qualifying child is a refundable credit. That's what you're going to get. If you filed your 2008, if you haven't filed your 19 return and you filed your 18 return, they're going to use your 18 numbers. If you filed your 19 return, they're going to use your 19 numbers. So, but the issue is that we have, this is a credit against your 2020 taxes, meaning this is an advance on a credit that is going to be on your 2020 tax return. So you can see that there could be some confusion. So if you, for example, if you have a child in 2020, you're going to be eligible for a $500 credit at the end of this year, but you won't get that right now, but you'll get it at the end of this year. So I just want people to know that this is an advance on a 2020 credit. And if you make over $150,000 as a joint individual, or $75,000 as a joint, or $75,000 as an individual, this could be reduced on your 2020 taxes. So I just want to make that clear for people. It's completely phased out for individuals at $99,000 and joint filers at $198,000. So if you make under those thresholds of a 150 joint and 75 individual, you should be getting a full credit, and that credit will be reconciled on your 2020 tax return. And with that, I believe my time is up, unfortunately, but I'm sure there will be questions. Thanks, Bob.
Thank you, Michael. A lot to digest. Our next and final speaker is Andy Jackson. Andy?
Thanks, Bob. And I think Mike did a great job covering the tax overview of the CARES Act. What I wanted to do is just kind of add to it a little bit and offer some pointers just generally as to businesses and some asset protection matters. I think the most important takeaway from the CARES Act for small businesses right now is the PPP, or the Payroll Protection Program. And essentially, that program has a funding cap. And so, as Cecil mentioned earlier on, it's important to operate with a sense of urgency. That's not to say to panic, but to get with your banker and try to apply as quickly as you can. You're most likely going to go to your bank where you have an account and have a relationship with. This is really due to the unknown compensation or fee structure. I know they put out some guidelines last night. A lot of banks are getting overwhelmed. So if you're trying to shop it online, that's probably not a good approach. You really want to reach out to the banker that you have a relationship with and start there. There are other parts of the CARES Act that are important. I think the Payroll Protection Program is where you want to start, though. And I think it's important to pull out the application. It's not very long, and do the math to figure out the loan amount. And it's essentially 2.5 times your payroll cost. And once you have that number, that will help you determine whether or not you should apply for the PPP or some other program. For example, if that number is less than $10,000, it may be better for you to apply for the economic injury disaster loan. And that is essentially a grant for $10,000 up to, and it comes out much faster. There's a lot of great resources that I know the Chamber is going to be posting online, and I encourage you to look at those. It includes the Senate Committee guide to the CARES Act, and I think that answers a lot of questions and allows you to kind of go through what you need to be thinking about. I also want to point out that just to be aware of fraud during this time. And by that, I mean just contact your local banker. If you're getting reached out to as a business owner by other people, there's going to be a lot of, during times where people are struggling, just be aware of that potential for fraud of people reaching out, and you don't want to be further injured during this time. It will take time for the approval of the PPP. It's still unknown. I know a lot of people think they're going to apply and then get it instantly. It will take some time. The other economic injury grant is faster. However, you generally cannot double dip through each program unless you're using the proceeds for different purposes. There's also some other parts of the CARES Act. There is small business debt relief if you have a current SBA loan. I encourage you to look at that. There's counseling that's available as well, and I think that's in the materials that you can look up, and that may be a good avenue for you also. I did want to point out with the the Paycheck Protection Program, that there's no personal liability if you're applying on behalf of your business. Compare that with a sole proprietor or an independent contractor, and that application period, I believe, is next week. It's about a week out to apply. So that's an important difference between the PPP and the other programs that are available. If you're incorporated as an LLC or a corporation, for example, that means you can't individually be held liable for the payback of that loan. So, and the payback test really goes into the 75% test for payroll during the 8 weeks from the loan. So it's important to keep that in mind as you do obtain the loan, how that loan is used, because if it meets that test, it will be forgiven. And I think the other thing you want to be thinking about as you're operating your business is what is essential and what's non-essential in terms of the services for your business to protect its health. And be thinking about that as you move forward. I also wanted to add in some other just general pointers regarding, there's some conversation regarding evictions and forbearance of loans and that sort of thing. I know that just yesterday, Governor DeSantis is issuing an executive order. I have not read that order yet, but there is some talk of forbearance on loans and evictions. There are currently administrative orders put out by the different judges that have limited and suspended or put on hold foreclosure sales and writs of possessions for evictions. So keep that in mind as you're operating your business, that there's probably going to be some more things in the news about obligations to pay your loans or rent, and be thinking about that. And I encourage everyone to just adapt to technology as we begin to work more remote. And there's a lot of questions going on right now about business and personal documents, operating agreements, and succession plans. Be thinking about that if you've been putting that off. The Supreme Court of Florida has allowed remote witnessing, so that's a positive thing. Remote notarization of documents is effective as of January 1st of this year. So that's helpful as we work more remote these days with the stay-at-home order. Keep in mind that remote notarization of wills or trust is not effective until July 1st, unless the legislature in Florida does something to move up that date. That's an overview of some of the topics that I wanted to mention on, and I'll turn it back over to you, Bob.
Thank you, Andy. This has really been an incredible amount of information in, 35 minutes so far. But what I'd like to do now is open up the floor for questions. I appreciate the ones that you folks have already sent. My colleague Kathy Newman will be fielding some of those as well. And I would like to actually start off with a question that we received last night that I've heard personally from a number of small business owners. And I'll kind of direct this one to the panel. So identify yourselves if you, or when you're answering the question. The question is, as a small business owner, and I think this was already answered, but can I hire back previously furloughed employees in order to participate in the PPP program? And if so, is there a deadline? And the last part of that question was, I'm in the retail business. Do my doors have to physically be open for business given Governor DeSantis's safer at home executive order that just came out last night, where my business is not deemed an essential business? Any thoughts from the panel?
Bob, this is Cecil. I'll answer part of that, and then maybe one of our lawyers can answer the second half. But the program provides for your ability to hire back employees that you have furloughed. That's one of the primary reasons the program was developed, is to be able to hire back folks that we've had to lay off. You have until June the 30th to have those back in. Basically, as I understand it, looking at the guidance, they're going to use February 29th, February 15th, February as your start date, and when what your employee base was before this hit, and then they're going to look at what your employee base is on June 30th, and they're going to compare those two numbers. So you need to be close on the number of people you have on June 30th to what you had in February when the comparison starts. That's giving you the ability to rehire furloughed employees, replace furloughed employees who have found other employment. It really goes to the number of employees you have from February 15th compared to June the 30th.
Yeah, this is John Delaney, and Mike or Andy may have the specific details. I know in one draft, and I think it was actually in the final, you had to have them hired by April 1. Well, the bill passed or was signed last Friday, and there was, no real way to have that publicized. So the SBA announced that it was going to have some flexibility on that date. But I think when you sit down with the banker, you can you can work through that. But keep in mind the purpose. In the United Kingdom, they took a different approach. The government there said, we will pay 80% of the salary of your employees if you keep them on the payroll. And then the company had to pick up the other 20%. And some are arguing from a policy standpoint that may have been a healthier way to go, is to send the money straight through to the employees that were related to payroll to have the employees paid. The idea is to keep people being paid. And so that sort of slides into the second part of the question, is you do not have to be open to be able to apply for this. But they do want you paying the bills.
Yeah, I would just comment. I mean, that the PPP, I would just kind of echo what was said there. I mean, the point of the program is to keep people employed and to hire people back. And in terms of keeping your doors open, I haven't read anywhere that that is a requirement. I mean, you do have to meet the test for the forgiveness, and they're going to be looking at what the loan is used for. So you do need to keep people payroll going and keep people employed, but it is going to practically be difficult for certain businesses that cannot work remote. So I'm sure there's going to be questions as you talk with your advisors as to, essentially, I'm paying someone, but they're not really here or doing anything. But I have not read anywhere in the legislation that is going to be something that's going to be ultimately tested. And I mean, I think just kind of given the amount of what's being put forth in this legislation in the time period that we're dealing with, I would think from an audit standpoint that there's going to be a lot of, they're going to take a broad approach to looking at things down the road. It's important to keep the source documentation in place, but the idea behind the PPP loan is to keep people employed and to bring people back.
And it's John Delaney again. Obviously, a business like a restaurant, even those that are staying open for takeout or delivery, probably is employing a fraction of what they would when they were open. And so, yes, there will be literally people that, if you activate this, that you'll be giving money to that aren't working. And frankly, the lawmakers are fine with that. They want money going to the workers so they can make their car payments and their rent payments and pay their medical bills and their deductibles and those sorts of things. And so somebody mentioned this either earlier, it may have been when we were all talking yesterday. Right now, it's kind of found money. It's free money. And that's what the lawmakers want. They want this money pumped into the economy. But it is really ripe for fraud. I'm sure there's going to be people that are going to be making up businesses and making up documents. And just because they're loose now does not mean they're going to be happy with cheaters in another year. And so, you want to be honest and you want to be clean. And I'm sure people have filed to listen to this. That's what they're doing. But I think there's going to be a lot of people that are going to get prosecuted that are scamming this thing in the future. But fundamentally, if you're dealing in good faith, if you're trying to, get your employees that were on the books in February, continue to pay them for 2 months, you also can be reimbursed for your mortgage payments and utility expense, benefits for the employees. Those are all forgivable if you walk this on through.
Mayor, thank you for that. This is Michael. There's a common thread throughout all of these provisions. It's how do we get cash into people's hands as quickly as possible? So I think this PPP program is one mechanism. That employee credit and the deferral of the payroll are another mechanism to keep cash in the hand of people. In terms of the PPP, there's a reason why they have 2.5 times. The calculation is 2.5 times, not 2 times. Because there's an 8-week window that starts for the payroll that you have to cover from the point of when you get the loan. And correct me if I'm wrong on that to anybody else in the panel, but it's 8 weeks that begins when you get the loan, and then that's 2 months. But they are allowing you 2.5 months for this loan, and that extra half a month is to cover mortgage interest, rent, utilities, and I believe that's it.
Benefits.
And they also employee benefits as well. Correct. So that's why that 2.5, that half a month is really to cover that. So just be careful on this. I'm going to echo that. I've seen in multiple literature that the banks are kind of getting a pass on this in terms of they're 100% backed by the government and they're not liable for basically people frauding and not telling the truth on these loans, I think. And because of that, I've seen literature that says that they're going to go after individuals that are just abusing the system. So just a word of caution to everybody. I would like to echo that as well.
And Andy Jackson here, I think that's an important comment on the 2.5 times factor. I think as you obtain the loans, you really, if the question of do I put it towards utilities or do I put it towards payroll, the obvious choice is payroll because you want to meet that 75% threshold. There's going to be more guidelines putting out some things regarding what's included in certain items, such as, I think that internet, for example, is going to be included in the utility factor. But really, as you're thinking about it, should I apply, there is no personal liability if you are incorporated. So even if you do not have the loan forgiven, there's no personal liability. It would just be liability of your business. So you don't want to take out the PPP loan if your business is just going to ultimately shut down. But if it is going to make it through the storm, so to speak, I think the safest answer is to apply for the loan and then manage that loan under that 75% rule the best that you can. And the worst case scenario from there, assuming that your business is incorporated and makes it through the storm, is that you have to pay a portion back. So just keep that in mind.
The key thing is payroll, because there's a certain percentage has to go to payroll, And so if you're high on rent expenses, utility expenses, you may not get all of that forgiven if you're not shifting enough to payroll. But and again, there's a number, just the nature of this, there's a number of other provisions that are in there on, student loans are suspended for 6 months. There's tax credits, there's emergency funds, there's some loan forgiveness, there's a number of these things. But the big operative one I think that people are focused on now is the PPP. Some of the tax components that have been alluded to can free up cash now. So it's worth going over with a lawyer or with your accountant to try to see what is available that you can maximize.
Here's the question. Again, I'm going to throw this out to the panel from one of our participants. Does the PPP loan refer to gross payroll or net payroll? That could make a huge difference in the amount received.
Yeah, this is Michael. I believe that from the calculations that I see, it's gross payroll, including benefits, health benefits.
The only, and this may have been, Mike may have mentioned this before, but there is a cap of $100,000 salary. So if salaries are above $100,000, you can only get sort of forgiven for the first 100,000.
That's a great point. It's an annualized calculation on top of that. So basically, you have to annualize somebody's salary, and if that cap applies to an annualized calculation. There's a lot of Excel templates that are starting to float around online to help people calculate these figures. I'm sure there's going to be more unified examples out there, but there are some templates that are available online right now.
So this is Cecil. Specifically, what's identified as payroll costs are any form of salaries or wages or commissions or compensation similar to that, any cash tips, payments for vacation, parental, family, or medical leave, anybody that's under an FMLA order, allowances for separation or dismissal are allowed to be done. Benefits, which include your health care, insurance premiums, retirement, and also payment of state and local taxes. Of course, we don't have those here in Florida. All of those things are counted as payroll expenses or payroll costs.
And Andy Jackson here, I think I'd echo everything that was said there and just also add that independent contractors do not count. So compare that with W-2 employees.
Okay, here's a question from Michael. To qualify for the PPP, does a business have to show a loss in revenue? And if so, what's that amount?
Again, John, go ahead. I was going to say no. You don't have, for this provision under the PPP, you do not have to show a loss of revenue. You do have to, however, certify that your business has been impacted by the virus, and that's going to be broadly interpreted. Again, I'm subject to colleagues on the phone. That's pretty much everybody in the country is going to be able to say that.
Okay, here's another question. What about a sole proprietor or contract employee who has lost contracts because of the economy? Does this apply to recouping loss for those particular individuals?
If they're talking about a loss that they're having in the business, I think the NOL provision on the tax side will cover that. But I don't, in terms of the PPP, I believe that is a payroll and the mentioned items of mortgage interest, utilities, that covers that. But the loss will be covered under the NOL provision in the tax law to carry that back to get a credit on the tax return.
Okay. Here's one from a new small retail business. Our debt is on credit cards, not direct bank loans. What is the best way for us to be able to cover interest and payments due during a time that we are not making sales?
This is Cecil Gibson. For expenses not related to payroll, the SBA has a couple of different provisions. The EDL loan or is the one that you probably would use for covering debt payments and operating expenses not related to payroll. It is a direct loan from the SBA, and it is funded directly by the United States Treasury. That program would allow you to borrow. It is a more traditional type of a loan. It's going to have personal guarantee requirements. The SBA will seek to get collateral if it's available, but it will let you finance up to 30 years for those types of expenses that you're trying to cover. And the interest rate for a for-profit company right now is set at 3.75%, and for a nonprofit at 2.75%.
Cecil, John Delaney. Yeah, I think the problem with that one, I don't think you can do the EDL or the EIDL in conjunction with the PPP plan, the payroll protection. I think Mike or Andy mentioned that.
I think that, I'm not sure, and somebody correct me, please, because, you know, with the EDL loan not coming directly through the banks, I'm not quite as up to speed on that. But I think that provision says you can't borrow for payroll purposes for both EDL and the PPP. If you use the PPP for payroll, then you can't also get payroll money or that $10,000 emergency grant money on the EDL program. But I think the EDL debt, for debt and for other items like that, I think they still can get that money.
Cecil, this is Michael, and I've read that in the Senate committee report as well. As long as you don't mix the PPP and the EDL loan in the same payroll, you can get both loans as long as you don't have that. The what I mentioned before is that you cannot get the PPP and the employee retention credit for employers. Those two you can't get at the same time. So the only decision you have to make is on that is, do you want the PPP or the employee retention credit for employers?
And Andy Jackson here. That's correct. You just have to make sure you're not double dipping for the same purposes.
Here's another question, and again, I'm going to throw this out to the panel. Do employer retirement plan contributions count toward the payroll contributions or just insurance contributions? Yeah, I don't. Employer retirement plan contributions count toward the payroll contributions.
Again, John, and we've got two other experts on there. I don't think they will count retirement benefits. All other benefits, I think, are okay.
I believe Andy Jackson here. I think that when you go through the application, they do. The first thing I can say is just when you fill out the application, I think it begins to take things from being abstract to more specific. And really you go through there and include all the documentation. And part of the documentation they request are retirement plan funding documents, such as 401ks, IRAs, things of that nature. So I think you would include all of that in kind of outlining it on the different payroll costs. And that's my understanding.
This is Michael Scine here. According to the Treasury Department on their the application instructions on the Treasury Department, they say employee benefits include costs for vacation, parental, family, medical, and sick leave, allowance for separation or dismissal, payments required for provisions for group health benefits, including insurance premiums, and payment of any retirement benefit. That's according to the instructions from the Treasury Department only a few days ago.
Okay, and that's a change from the bill from last week then. That's good to hear.
And what I would add is when you go through the application, you're going to have more specific questions, like such as, well, I own my business and I pay rent to myself and it's a separate LLC that my wife and I own, for example. And I think you just want to make sure it's going to have a question on there. And I think it's you need to disclose that. It's not clear to me yet whether they're going to take that back off because you're paying yourself rent, or whether that's going to be covered. I think it's going to be covered, but it's not clear yet. So I think, you just want to apply early and make sure that you're being truthful and accurate on the application, which is not very long. It's more attaching all the source documentation to the application, and then waiting to hear back from that at that point.
We've got time to look for a couple more questions that I've gotten in. Thank you for these. What happens to businesses that have only been in business for a few months? I do not have a 2019 tax return to provide since I just opened my doors. Additionally, prior to the coronavirus, my accountant, since I am a new client, told me he was filing an extension, so I have nothing other than the extension paperwork to provide. Where does that leave me and my business?
Andy Jackson here. I'll attempt to answer that. I know that's one of the kind of frequently asked questions as to when your business was operating. I believe that if it was not in business during a certain time period, you used 250% of your average monthly cost between, I think, January, like the last 2 months, January and February. Mike, you may have additional comments on that, or may have looked at that further.
Yeah,
I mean, there is a cutoff date. I do know that.
Yeah, I
believe it's February 15th or something.
Yeah, I believe, and I could be wrong, so don't. This is Michael Scine. I believe that there is a provision for new businesses, even that started in. I think they had to be effective 1/1/19. I think if you just start a business this year, it may not cover, but last year I think it will cover. There's a special calculation I don't have in front of me right now, but I think there will be a provision available for new businesses for that.
Yeah, this is Cecil Gibson. I believe that if you were not in business before February of 2019 to June of 2019, you would use your average monthly payroll for January and February of 2020, and then multiply that monthly average by 2.5 to come up with what you would be able to apply for.
Yeah.
These are some things that were discussed in the kind of the final days with Congress. You got to have a date cutoff somewhere, but there are some people being left behind. Even the $1,200 and $2,400 check that goes to individuals, there's an income threshold, but there's a lot of people that maybe were above that threshold in last year, 2019, but are making nothing now, and they desperately could use the cash as well. So that's part of the kind of things, recent businesses that started up this year that they're hoping to catch up in sort of a phase 4. So we'll all just kind of have to keep our eyes open for that.
So much. I'm just looking at the clock, and we are almost out of time. But really appreciate you sharing your knowledge and advice. With that, I'd like to turn it over to Mike Oppenhaver for any closing remarks.
Thank you, Bob. I appreciate that. This is all very important information. But on behalf of the Chamber's Economic Development Council, I'd like to thank you for your efforts today, Bob Porter, and each of our panelists, Mayor Delaney, Cecil Gibson, Michael Scine, and Andy Jackson for sharing their expertise with us this morning. And to all Chamber members and guests who participated in today's webinar, thank you for spending your morning with us. We hope that you found this information shared today to be very helpful. If you wish to access this morning's webinar at a later date, a recording will be made available online. Again, thank you all very much, and good luck to everyone.